Hello everyone, and Merry Christmas and Happy Holidays from Dan Basse and Bill Tierney here at AgResource. We're coming to you with the last video of 2016, and we really want to talk, Bill, about 2017 and what this all means. So, not to get beyond the holidays, but the Chinese Lunar New Year's early this year, and this may be one of the reasons we're seeing the Chinese pulling back a little quicker from the soybean market, is evident in the last couple of days. But getting beyond that, if we look at 2017, and we think about the Chinese Lunar New Year, which is the year of the rooster, kind of apropos with all the bird flu that's been going on in Southeast Asia. What do you think we could look at 2017 in agriculture, and what do you think we could call it?
Well, again, keying off of China, the world's largest soybean importer, possibly the year of the oilseed. I say that because when we were looking at price relationships between December corn futures and November soybeans, looking at them on December 1, going back to 1996 when Freedom to Farm was passed, we couldn't find a time at this point in the calendar that soybeans were so strongly favored relative to corn. So U.S. farmers, and I surmise that farmers, oilseed producers around the world are getting the same signal. The other thing that's going to happen this year is one of the big factors that goosed the oilseed market was the impact of La Nina on palm oil production in Southeast Asia, principally in Malaysia and Indonesia. Palm oil is the world's largest produced vegetable oil. It has the largest share of total vegetable oil, soy oil second, and it dominates the trade, the global trade in vegetable oil. Well, next year, according to an Indonesian state research agency, they're projecting that Indonesia's production is going to recover about 6.6% after being down 2.3%. So on the one hand, you've got this very strong price signal to plant more oil seeds. On the other hand, the largest supply of vegetable oil is anticipated to rebound very nicely next year. So there's going to be a lot of things happening in the veg oil complex, oilseed complex next year.
So at least for 2017, it's about supply. And so U.S. farmers plant record acreage. We could see more canola, rape around Europe and Canada. China will probably get in the game also. And then we've got, as you say, the 6 million metric tons potentially of additional palm oil production coming on the market, because trees always do better in the year following a drought, and this year would be that year. So I guess what we're saying is that the supply pressures on oilseeds looks to be fairly significant.
I agree. But, you know, there's some other things that could happen this year, and we were talking with our climate consultant, and he's a little bit concerned about the potential for a drought in the Black Sea area. Do you think that could have much of an impact on the wheat market?
Well, if I were to pick a market that I'd want to be long in, at least for the time being, and maybe what we're talking here is a short oilseed, long wheat story, to me, wheat prices at 10-year lows. Yeah. And U.S. wheat seedings being at their second, let's say their second lowest level since 1900. If you had a problem somewhere, whether that's in Europe or the Black Sea, it would have a tremendous impact. I don't think that would really carry the market until March, April, or May. But nonetheless, it's something to be very important. So for my money, Bill, looking at 2017, I would rather look at wheat in terms of being a long-term bull or a bullish, betting on some admiralty. Wheat's planted in so many places around the world, the odds are pretty good that somewhere, somehow, someone's going to have a weather problem that could give the market a little jolt.
I agree.
My name is Dan Basse, joined by Dr. Bill Tierney, wishing you all a Happy New Year, Merry Christmas from AgResource. We'll see you in 2017.